in the next like 14 minutes or so, I'm going to try to tell you three important things. Number one, what is this institutional growth wave that we are about to experience? Like, how big is it? How long is it going to last? Number two, what are the ways in which companies are going to be able to succeed in this environment? And number three, what is it that Ernst & Young, EY, is kind of doing in this business, in this ecosystem? So let's go ahead and get started. Number one, let's talk about what is driving adoption and this incredibly long growth cycle. And the answer is, we are entering into the regulated era. And the truth is, big transformations, like when institutions get into ecosystems, they take a long time, right? So if you look, for example, at network equipment or smartphones or e-commerce, all of these had growth waves that lasted somewhere between 15 and 25 years, and the growth was 20 to 25% a year, every year for 20 years. That is the duration, size, and scope of this sort of institutional crypto and blockchain growth wave that we are embarking on, right? Cryptocurrencies are universally available everywhere. There is somewhere between 5 and 25% of the population that owns them. It depends on the country. And then secondly, very importantly, we are currently experiencing global regulatory convergence, right? The world is converging towards a regulated, stable environment for cryptocurrencies, for digital assets, and for real-world assets, and eventually, although not yet, decentralized financial services, DeFi. Now, you'll notice the US is a bit of a laggard here, but even in the US, we are seeing significant progress, and I'm actually quite optimistic that after the November elections, there's going to be really meaningful progress in the US market as well. So I talked about how long this is going to take. Let me take a moment to talk about how big this is going to be, because kind of spoiler alert, it's going to be really, really big, right? We talk about the sort of the great liquidity reservoir. The amount of money that we have in cryptocurrency today is minuscule, right? Bitcoin is like $1.3 trillion in a global asset pool of roughly $800 trillion, right? So where we are today is a very, very tiny fraction of what's going to come in the future. And in particular, the growth is going to come, I think, in two areas, right? But most importantly, much of these assets are in institutional infrastructure today. They belong to banks, they're mortgaged, they are part of pension funds. Like the average institutional pension fund has restrictions that say they can't just go and buy like a bunch of crypto. However, most of these institutions have allocation rules and strategies of somewhere between, say, 10 to 15% of their assets can go into alternative investments. That is potential for cryptocurrencies and digital assets. So again, if you think about $800 trillion of the world's assets, we can look forward to potentially over time, maybe somewhere between 80 and 150 trillion dollars of assets into this digital asset and cryptocurrency ecosystem. Now, I think this is not just kind of a slam dunk. This is not a winner. This is not a everybody gets richer kind of market. This is a market that has selective winners and losers. And the first thing is not everybody is even ready to participate in this market. If you want access to institutional funding, to institutional capital flows, you need to be inside and participating in a regulated environment. Today, almost all the crypto trading that exists out there, it's offshore. It's in places like the Seychelles and the Virgin Islands. But 99% of the world's capital is onshore. It's in regulated markets. It's controlled by regulated pension funds. And regulated pension funds and sovereign wealth funds, they don't buy crypto offshore. They buy crypto onshore from regulated entities that they do business with already, who are selling them bonds and stocks and so on, right? Everyone who left regulated markets during the crypto downturn, they're turning around and trying to get back in. And just to give you a sense, like we are facing at EY a stampede of clients who are basically asking the question, how do I get into and regulated by the EU under the MiCA legislation, the UK, the US, there's a huge priority on being regulated and approved and collecting all of these different licenses, and it's not cheap, right? People are investing really, really enormous sums of money to participate in this market. But trust me, I think that the payoff is absolutely worth it. The second thing is that not everyone is going to benefit from all of this growth. I really believe this is a winner-take-all market. The first winner, that's the most important one, is around cryptocurrencies, right? So I think we can see crypto get to a market size roughly the same as what we get for like precious metals today, say roughly like $10 to $15 trillion. The real growth in assets is going to come in digital assets, which is a tokenization of real-world assets. Real estate, art, syndicated loans, just to give you a few samples of what the potential in this market is. Now, even within this, it's not just like, hey, crypto can be $10 to $15 trillion. It's probably just going to be Bitcoin. And the analogy I want to give you is from the world of precious metals. There are lots of different precious metals, right? There's all kinds of things you can bury in your backyard in anticipation of World War III, right? Gold, silver, platinum. But the fact is that overwhelmingly, when people think about getting a precious metal to secure against the risk of inflation or stability, it's gold. Bitcoin is like gold. And what we will see, I believe, in the future is that in the same way that gold has a market cap 10 times larger than the next largest precious metal, the same is true for Bitcoin. And indeed, if you look at the market caps today, Bitcoin is, in fact, much more than 10 times larger than the next largest, I'll call it true crypto asset, which in this case is XRP, right? Now, what Bitcoin is to other pure cryptos, Ethereum is to smart contract blockchains. So if you look at the Ethereum ecosystem, it is, when you collect it together, depending on how you count it, smart contract protocols, other systems, including the L2s, between like 8 and 12 times larger than the next largest ecosystem, and it's much, much larger than most of the others. So Ethereum is taking this spot. Ethereum is the dominant player for smart contracts and digital assets. Bitcoin is absolutely becoming the dominant platform for cryptocurrency. There's really not going to be, I think, anything else other than Bitcoin and the Ethereum ecosystem. Now, one thing that is really important to understand, though, is just because you are into Bitcoin or Ethereum, it's not going to protect you from price competition in this space. We saw this with the ETFs, right? Prices basically almost immediately collapsed from like premium pricing down to about the same as any other ETF. That's going to be true everywhere you go. There's only a small and temporary advantage from just saying, hey, it's cool, I do crypto. All right. Let me talk a little bit about what is EY doing in this space. Our goal, very simply, is to create the tools and services to help anybody get into this market, to do it in a regulated, compliant, and successful way at scale. And specifically what we do are kind of three major things. Number one, we build infrastructure. So we have built an Ethereum Layer 2 network. It's called Nightfall, and it is a privacy-enabled network, and I'll talk a bit more about that in a moment. Secondly, we build business applications, supply chain management, product traceability, vaccine traceability, carbon traceability, and blockchain analytics and blockchain security. Like, for example, we do what other people call smart contract audits. We call them smart contract reviews, but it's the same thing. In fact, I would say we think we do it better. And we do the things you would expect us to do: consulting, tax advice, and of course, financial statement audits. So we are very heavily invested in this space. For us, the most important engineering investment that we've made is around privacy technology. I have a hypothesis that as this market grows, the number one thing that's actually holding back institutions and enterprises from investing seriously in the blockchain ecosystem is a lack of privacy. Now, it previously was kind of a scalability issue. Can we handle the transaction volume? But today, the biggest remaining issue, other than sort of regulatory compliance, is privacy. You don't want to know you do not want to give your trading strategy, your portfolio, your supply chain details to your competition. And we've built two pieces of infrastructure that really support that privacy tools. The first is our layer 2 network. It's called Nightfall. And then secondly, we have built a smart contract compiler called Starlight. You can actually use Starlight to take a traditional Solidity smart contract and turn it into a zero-knowledge circuit. We have more than 80 banks in Brazil testing out Starlight as a privacy tool for the Brazilian central bank digital currency infrastructure. Both of these are public domain, open source contributions to the crypto ecosystem. They are both EVM compatible. You can deploy them on any EVM compatible network. We have been working on privacy since 2017. To give you a sense of our investment, we have a sizable engineering team. They are focused just on privacy technology. They are based in the UK. We've got every single one of them has a PhD in math or physics or cryptography. This is very serious kind of progress. To give you a sense, we have improved over the last 7 years the performance of our privacy technology by more than 10,000 times. Right? So what used to cost $100 for a transaction, we can now do for under a penny. We get great recognition in the marketplace. So a lot of the major analysts say that EY is head and shoulders the leader when it comes to public blockchain technology, and we are absolutely in kind of the leader quadrant in terms of like enterprise blockchain services and the overall blockchain ecosystem. We are very explicitly an Ethereum-aligned firm. I wrote a book. It's called Ethereum for Business, not just blockchains for business. And I am, and EY holds the chairmanship of the Enterprise Ethereum Alliance. So we really are very focused on the Ethereum ecosystem. We have a lot of clients. We've probably over the years done more than 1,000 client projects. We have implemented all around the world, in Europe, in Asia. We provide all the analytics for Fidelity Digital Assets. We are at the center of the Central Bank of Brazil's privacy technology. We are used for product traceability for more than 5 million bottles of wine on the public Ethereum blockchain. So, kind of closing thoughts in the last minute here. If you want to be successful in this kind of rapid, high-growth, long-term Ethereum ecosystem, you really need to be in it for the long haul. And I want to share with you one of my favorite data points, which is the time required for investors to change their investing behavior. In the 1950s, almost nobody in the US spent even $1 on like stocks as a part of their portfolio. By the 90s, that was the majority of their portfolios. I think it's going to take roughly the same amount of time, about 40 years, for the world of investors to switch from a very traditional like stock-based portfolio to one where you have a whole mix of stocks and bonds and digital assets, cryptocurrencies. It's going to take that long, right? But the size of the investment output is going to mean that all along the way, we're going to get 20, 25% a year growth in this ecosystem over the next 40 years. So if you're in your 20s, you'll be able to ride this to retirement. And lastly, I have an NFT for you if you'd like it. What's the point of building a whole blockchain ecosystem if you can't offer people a free NFT? We call these proof of Paul, so it just shows you've seen me in person. We will mint you a token and send it to your wallet on the Polygon Proof of Stake network. And I think we have exactly 0 seconds left for questions. So thank you very much.